When you have these three different moving averages, it's going to present to you different market phases. There's a phase not particularly keen on trading, and there's a couple of phases that I will trade. I'll show you the trading phases. I'll show you the phase I don't want to trade, explain them to you. Now, I'm going to switch over to my TradingView terminal because the drawing tools are just a little nicer. Now, not only the drawing tools, I'm going to get my drawing pen out as well. So with the different phases, we have these three moving averages. And again, they're going to give us different market phases. The first market phase, the nicest one, the one that we want to trade, is called a technical trend. Now, the technical trend happens when you have all three moving averages in order. So in this case, what we're looking at is the market in a downtrend, a technical downtrend. Right at this point here, and if I draw this, right at this point, we get the cross down of the 50 below the 200. So at this point, we've got the 13 underneath the 50, underneath the 200. We've got a technical downtrend at this point. So we are looking for short trades. Now, if I scoot the chart over, let's look for a technical uptrend. Again, this is a technical downtrend. This is really, really nice. So at this point right here, I'm looking at the moving averages. We get this crossover to the downside. We have the 13 below the 50, below the 200. Again, we've got that technical downtrend. Now we have a technical uptrend just over here. This is a beautiful technical uptrend. Now the technical uptrend happens with a different orientation of these moving averages. What happens is we have the longer term moving average, the 50 and the 200 up, but that 13 has dipped down and come back up again. And with this 13 crossing over the 50, we have a technical uptrend. We've got the 13 above the 50, above the 200. And then from there, we're just simply looking for those buy opportunities. So we've got that technical trend. This is the best kind of trend. Now, the moving average orientations that I kind of want to avoid are something like this. When I have that small moving average in between the other moving averages. So we've got the 13 in between the 50 and the 200. This is considered an unordered phase. We don't have any proper order with these averages. They're not ordered up. They're not ordered down. They're not in alignment. We've got the short-term trend pointing down. We've got the long-term trend pointing up. We have chaos. We've got two different trends telling us two different things. So at this point, I am going to just not be looking too hard to take a trade. I want everything to come into alignment. I want there to be agreement. Now, when it comes to this third trend, this is what I call a tradable trend, and the moving averages are still out of order. We've got the tradable trend right in here, but we don't have the averages in order. That 200 is in between the 13 and the 50. So we don't have a technical trend at this point. Now, what I'm going to be using the 200 for is bias. I'm going to be looking to it as a market bias. What direction is the bias? I've got a short-term trend pointing down, and that starts right here. And what happens is at this point, right in here, we get the price dropping below that 200. So the bias now is to the downside. So I've got this short bias coupled with a short-term trend being down. I can look for shorting opportunities. As long as the price doesn't get back above that 200 and that trend stays down, I'm going to be looking for those shorting opportunities. I call this a tradable trend. It gets you into the trend long before the trend may be official, a technical downtrend. So at this point, anywhere in here, we get the market move below. I'm still looking for the pullback. Right? So I'm still looking for the price to give me an opportunity. I'm not just going to blindly take a trade. I'm looking for the pullback, and then we've got that opportunity to go short, even though the moving averages are out of order because the short-term trend is down and the bias, the market is underneath that 200. That is also down. So I've got the two different things working together, giving me an opportunity to look for those short trades. Now on the upside, in this area here, we could be looking for long opportunities. We've got a section of the market in here that is not looking very good. So right from here, all through this area, we've got the market moving quite sideways. And the reason for this is because we have that 13 in between the 50 and the 200. We've got the market bouncing in between those two different moving averages. And that's typical for this unordered phase. We have that ping pong ball effect. So we've got this market bouncing around. Now in this area right here, however, we get the price popping out above that 200. And when the market moves above the 200, I have a bias to the upside now. We've got that short-term trend pointing up. I've got the bias pointing up. Now I can start looking for those opportunities to go along. Now the first opportunity to go along is right in here, as the price pulls back into that 13 SMA. Now again, we don't need the price to get right to it. We are just looking for a pullback towards it. We want the price to get near to it. We need it to be in that nice location for an event. We're looking for that market to move into those moving averages and then take off. Now with this, we've got the short-term trend up. We've got the market bias up as the price is above the 200. We get the pullback, and then this candle right here, this would be most likely just about everybody's entry. We'd be looking to go long above these highs. This is a pullback candle. This gray candle here is a pullback candle. We'd be looking for the market to move above the high of that pullback candle. But we also have this swing right here. It's not a very big one, but it is a swing. So we get that market swing. We're looking for the market to move above that swing. And then from there, we're looking for that opportunity. Now at the same time, we could just be looking at the size of the candles. This one candle is a little bit bigger than its predecessors. So we've got some bullish push. We've got some momentum that is building into this market direction. So if we move on over a little bit, we're looking at an area of the chart where the moving averages are unordered. This again is an unordered phase. And what we're seeing is, because it's an unordered phase, we're getting some of this in between these moving averages. Now there is a section in here where the price does drop below the 200. Now the price dropping below the 200 is going to set me up. It's going to make me curious now. I'm going to start looking for possibly an opportunity to short this. What does happen though is we get that market move up and then it crosses back over that 200. Now the 200 bias is up, but the trend is down. The shorter term trend is down. So again, we'd expect a little bit of sideways movement because of that. Now it's not until right in here where we get both. We get the bias to the downside, we've got the trend to the downside, and the price does not get back above that 200. So it's this area where we'd start looking for those shorting opportunities. All right, so I hope this is useful. We're looking for a trend. We're looking for a tradable trend. And then we're looking for areas where we don't particularly want to trade because there is no trend. And in this case, we've got no trend. In this case, we've got a tradable trend that doesn't trigger anything. In this case, we've got no trend because the 13 is below that 50. So we've got that short-term trend, but the bias is up. And it's not until we get this crossover where the trend turns up. And as a result of that upward turning trend, we can see how well that this market moves. It continues to move until we get to this area here where we have no trend and it starts to get a little bit choppy until here where we start looking at a tradable trend. Moving averages, they're out of order, but we have the bias down because the price is under the 200 and we have that short-term trend down because the 13 is below the 50. We can start looking for those trading opportunities. When you're using these moving averages together, and with these particular settings, I like to refer to it as a framework. We get to see the market's framework. We can see pretty good what the market is trying to do, and we can see pretty well if it's a condition that we want to trade or stay away from. And with the market framework, we can build a trading system around this, and having these three moving averages gives us a really nice, clear picture of the market framework. And with that framework, we can start looking to be a more profitable trader. So those are the different phases that I'm looking for using these three different moving averages.